Welcome back. It's time now to take a look at what's making the business headlines in our top story. The UAE attracted $75.7 billion in foreign direct investments since the year 2000 and is now the second largest FDI destination in the Arab world. Figures from the Kuwaiti-based Inter-Arab Investment Guarantee Corporation revealed that Saudi Arabia came top of the FDI list, receiving nearly $130.5 billion between 2000 and 2010. The UAE then followed in second place, accounting for nearly 17% of the total Arab FDI inflow, who were then trailed by Egypt with $54 billion. As for FDI outflow, the UAE came on top as the largest capital exporter for the region between 2000 and 2009, injecting $53 billion into global markets, followed by Kuwait and then Saudi Arabia. Property, hospitality and leisure retail group Majid Al Futtaim has announced that it has closed a $1 billion financing deal. The transaction consists of a 3-year revolver facility and a 5-year term loan. The proceeds will be used for early refinancing of the $1 billion facility that matures in 2012, as well as building the company's liquidity. Treasurer of MAF Holding, Danielle Vecchi, stated that they will continue to focus on diversifying their sources of funds and that tapping into the bond market is a top priority. Emirates Aluminium has given the go-ahead for a $4.5 billion investment that is set to double its facility's production capacity to 1.3 million metric tons per year by 2014. Al Tawila-based Emal is a $5.7 billion joint venture between Dubai Aluminium and Mubadala's investment company, and experts say that the expansion highlights the confidence within the UAE's aluminium market. They added that it will also create more jobs for nationals and help increase export revenues through tapping into new markets. Emal is currently on track to produce 700,000 tonnes of aluminium this year. Now let's take a look at the local and regional equity markets, which ended mainly lower today. And over to our world business news. With the clock ticking on raising the US debt ceiling, White House officials say that talks are moving into difficult days, but do remain confident that an agreement will be reached. Analysts say that the White House wants to strike a deal that would raise the debt ceiling by enough so that another vote would not be needed before the November 2012 elections. The currency markets have opened this week on a slightly weaker note as the US debt ceiling debate rages on, and with no clear conclusion in sight, risk sentiments have been capped, with investors moving into safer haven assets such as gold and the Swiss franc. Well, earlier we asked Gaurav Kashyap, the head of the DGCX trading at Alpari Middle East, DMCC, how this will play out and the impact on the performance of the dollar this week.
We saw Friday pass without any type of update or resolution to the U.S. ongoing debt ceiling debate. What we're seeing is more political posturing amongst Democrats and Republicans as they try to thrash out a deal which will keep both sides happy. Now, basically, the reaction we're seeing in the markets today is that we're seeing a lot of risk appetite being capped. We're seeing a lot of higher yielding assets selling off, and we're seeing a lot of gains in safe haven assets. For example, for gold, we've seen gold hit an all-time high of 1623 this morning, and we've also seen the Swiss franc hitting its all-time high against the US dollar at 0.8000. So we can expect risk appetite to be capped until they come to a solution. And now, looking at the grander scheme of things, we can see 3 possible outcomes with regards to the US debt ceiling. First is a short-term band-aid type of solution, which is called the McConnell-Reed plan. Immediately, we could see an increase to about $900 billion on the debt ceiling, and this would be followed by about $1.7 trillion to the debt ceiling, which could come through a combination of spending cuts. Of course, in this solution, the Democrats will be happy because the benefactors to Medicare and Medicaid will still remain in the situation, as would benefits to the Social Security program remain intact. Once we get this type of solution, which is looking likely to be passed by Senate this week, we should see an increase in risk sentiment bond markets will recover, which means equity markets will also recover, and there'll be an increase in demand for higher yielding assets. Gold in this situation will be primed for a correction. On the flip side, we would see, if we see the US debt ceiling passing, the deadline passing without any type of solution, this would be a financial catastrophe. Immediately we'd see the rating agencies dropping down US credit ratings. We would see this very, very negative impact in the US Treasury markets, and the US equity markets would also tremendously correct on that type of news. If that event happens, of course, Swiss franc will continue its very bullish run, as would gold.
And Zambia has commissioned the construction of a $2 billion Kafu Gorge lower hydroelectric power station, which will add 750 megawatts of power to the national grid once completed in 2017. Sino-Zam Power Corporation, a joint venture between Zambian state power company ZESCO and two Chinese firms, is to build and operate the plant before handing it over to ZESCO after 30 years. About 70% of the financing for the project will be loans from the two contractors, China Africa Development Fund and Sino-Hydro, and the remainder will be provided by ZESCO.
This project, with a total investment of $2 billion over the next 6 years and a generation capacity of 750 megawatt, will play an important role in meeting the faster-growing power need within this country and facilitating power export to neighboring countries when completed.
Zambia's power needs have been increasing faster than projected, largely due to the rapid growth of our economy, which has averaged 6.4% over the last 6 years.
And before we go, here's a quick overview of the oil and currency markets. After that, we're back with the day's sports news. So stay with us.